Hello and welcome to another Macro Mondays. My name's James Brodie. I'm Head of Learning and Development at Onyx Capital Group.
And I'm Harry Nedeljkovic, and I'm a research analyst here at Onyx.
I'll be focusing on last week's data, the implications that's had on the markets and what we're having in the week ahead. We had the US CPI and PPI data coming out, also inflation data from China, and also Chinese GDP and retail sales over the weekend.
So I'm also going to go into China's new homes data in terms of prices. And also sort of the big story from the weekend was the attempted assassination of Donald Trump. So I'll go into that briefly and then address the market effects that's had so far.
So let's look at the data. The key piece of data out the US last week was CPI, Consumer Price Index. This came in lower than expected, 3.0% year on year, estimated to come in at 3.1. So that was lower, good news for Fed. But what really surprised the market is that CPI came in down 0.1% month on month. This is the first negative month on month number for nearly 4 years. Big impact in the market. The 2-year yield, the bond yield fell 15 basis points. The market's starting to price more aggressive cuts by the central bank. And then we started to see some aggressive unwinds in the equity market. A favoured trade this year by the hedge funds has been long the NASDAQ and short the Russell 2000 index. That was suddenly unwound aggressively. On the day, the NASDAQ fell 2.2% and the Russell 2000 index rose 3.7%. That was the biggest spread move ever between these two. But if we go back and look at the interest rate impact, we had an aggressive move in, say, the bond market and the overnight index swap. So overnight index swaps now pricing exactly 25 basis points of cuts by the Fed at the September meeting, and now 64 basis points of cuts by year end. Now they won't cut 64, of course. It'll either be 50 or 75, unless they go even more aggressively, but they move in 25s. So the market's now saying, well, it's 50-50 if they're going to cut 50 or 75 by year end. The way the market is trending, it's trending for more aggressive cuts. So I think what we're going to see, the next key piece of data in the US is probably payrolls. We have 2 payrolls before September. Is the market actually starts to look at the possibility of 50 basis points in September.
Yeah, just crazy how one data release can have such a massive effect.
Absolutely, it's a big move in the bond market, and what you start to see then is the algorithms start to chase it, trend following, and the market narrative changes that inflation is no longer a problem. And if we look at the other economic data, it's coming in much more weak than expected across the board. One other impact as well from the CPI data is intervention. The Ministry of Finance, Japan, intervened straight after the data as well. Clearly, there'd been some coordinated discussions. They knew the data would be weaker. The dollar weakened. They jumped on it and brought the yen. So the yen strengthened across the board. Dollar yen, we've talked about this quite a bit recently. Today, it's trading at 157.80. Last week, just before the data, it was 160.195. And I bring this favorite chart of mine back up. It's the dollar yen is the orange line, and it's against the 10-year yield interest rate differentials. The black line is 10-year US bond yield minus 10-year US Japanese yield. And you can see, well, as the yield differentials go lower, clearly the US data is weaker. Actually, to me, it implies we may well have seen a peak now in dollar yen.
Yeah, that sort of divergence is just, really not seen for the entirety of the chart. How often can you say the yen's appreciated by almost 3% in the space of a few days, and it's still only at levels that it was at 2 weeks ago?
Absolutely. Potentially, it's got a long way to go. Again, I keep saying it's a very crowded trade. And again, we'll see how it plays out. But if it starts to continue to the downside, dollar yen, then we see the algorithms, we see the leverage hedge funds start to unwind their positions. Then it starts to move more aggressively. Of course, the flip side, if it's a yen, a currency trade, then we may see further appreciation in the yen. But my view is we've seen the top here. And again, if you want to trade it, then shorting dollar yen at these levels, you know exactly where to have a stop, just above the previous high at 61.95, just above there, so just above 162. And I'm sure that's a trade that certain funds will start to put on.
Good idea for anyone who's planning on a visit to Japan soon.
Yeah, I mean, what does this do for their trade? I know their tourism there is booming.
Tourism's been booming, but their exports haven't really benefited that much from how weak it is. I mean, given they obviously import a huge amount of things, especially commodities, especially oil, gas. But yeah, haven't really seen the sort of benefits you'd normally associate with having a weaker currency.
Yeah, that is surprising because it's been such a big move.
Absolutely.
If we move on Friday, we had the University of Michigan consumer confidence. This fallen sharply. Consumer sentiment came in at 66, expected at 68.2. Again, more weakness in the data. One thing that did come in slightly stronger was US PPI, Producer Price Index, came in at 2.6% year on year, estimated at 2.3. This is really pretty secondary. The Fed really focus on CPI, what the consumer's having to pay at the stores. Other data last week, if we look at China, the Chinese data comes in again weaker than expected. CPI is on the cusp of deflation again. CPI year on year, just 0.2% positive. PPI still negative, down 0.8% year on year. And then over the weekend, Chinese GDP and retail sales were both weaker. GDP down 4.7% year on year, estimated to be at 5.1%. And again, the PBOC, the central bank, their target is 5% by year end. So if they want to reach that target, this is now starting to fall. They're really going to need some more monetary stimulus. And on the retail sales front, retail sales in China was up 2.0% year on year, lower than expected to come in at 3.3%. So weaker data, US and China, which is 43% of the global GDP.
Wow. I think, well, especially with Chinese GDP data, it is just that in a year without a particular crisis, it's a real blow to the Chinese government for it to be below 5%. Just that headline figure that sort of everyone knows they operate under. And we've finally seen that in an official statistic. And sort of reflecting that weakness further, so Chinese new homes data, well, prices have fallen 4.5% year on year as of June 2024, the most in 9 years. This is the 12th straight month of decrease and the fastest pace of decline since June 2015. In the Chinese real estate sector, which as we've discussed previously is the world's biggest asset class, this decline has occurred amidst the central government attempting to mitigate the impact of the property downturn and a weaker economic recovery. Just to sort of break that down into various cities. So Beijing, prices are down 2.4% as opposed to previous of minus 1.8%. Guangzhou recorded the biggest declines, that they're down 9.3% year on year. The only major city that seems to have positive price growth is Shanghai with an increase of 4.4%. And there really seems no sign of this stopping. So as a sort of indicator on what potential decline or potential demand might be, 2023 recorded 9 million births and 11 million deaths in China. So a natural decline of 2 million. Really can't be overstated how much of a pressure down on demand that might be. And looking further into the future, so the UN releases a world population review every couple of years, and their review in 2024 was released 2 days ago. It revises expectations made in the 2022 review, and it's just something I found really, really interesting from that. So China's population in 2100 was forecast to be 771 million. In the 2022 edition. In this edition, it's now down to below 650 million. So really, when you've got that level of a revision down, it's alarm bells, it's sirens.
Absolutely. Something I find interesting, I've read this, it's over 60 million vacant properties in China. And the Chinese population, whereas in the US, people tend to invest in equities, in China, people in the last few decades have invested in property. They have over 70% of their investments in property, and it's going in the wrong direction. And I do see it as a crisis.
Oh yeah, we see this in every country that's starting to see their population decline. I mean, China's just not as far along as the likes of Japan, as Italy. But yeah, when you can just see a review that means, oh yeah, there's 130 million less people, it's
catastrophic.
It's just...
And interesting, you mentioned Japan. There's 9 million empty properties or properties for sale in Japan. But the other point we're starting to see in China is people are starting to invest in gold. Property is no longer the safe haven they want to invest in. So gold is now the favoured asset class, and we'll come to that chart shortly.
I mean, I'd almost think if you're a seller of one of these houses, who are the buyers? Like, really, just where are they coming from?
Absolutely. We see these ghost towns, there are no buyers.
I mean, I imagine as well it's a lot harder for foreign investors to enter the market, especially with sort of hostility between China, the US, EU, China.
So that would imply to me as well, the price is going to keep going down, down, down until finally the bid comes in, but I can't see where that's going to come from right now.
No.
If we move on as well, last week data, the Chinese trade balance hit a record, which comes across as a fairly positive headline. Two things. Firstly, imports in China are weak because of weak internal demand. Also exports, they're starting to export deflation. So of course, if Donald Trump does become president of the United States, which now seems highly likely, he's going to impose his tariffs. We're going to see more of the trade wars again. If we move on to the central bank OAS pricing by year end, we've touched on the Fed already. ECB and Bank of England, the market's pricing pretty much 2 cuts by year end. Interesting one though, New Zealand, small country, population of I think off the top of my head about 4.4 million people. But what we've seen some really weak data, economic data from them. Retail sales is now down 8% since January 2022. That's pretty staggering. Consumer confidence is at all-time lows, even lower than during the financial crisis. PMIs, Purchasing Managers Index, are below 50 in contraction. And unemployment has risen from a low 3.4%, is now 4.3%. But the central bank has stubbornly kept a tightening bias until inflation has been fully combated. We have, in the next couple of weeks, we have some CPI data out of New Zealand. And then we have the central bank's forecasts coming out in August, and the market's pricing that they're going to have to start cutting pretty aggressively. Nearly 3 cuts priced by year end in New Zealand. RBA, small chance of a hike. I really can't see a hike while other central banks are cutting. Bank of Japan, the market is still pricing 1 hike there by year end, which I think they're going to be forced to do really for the currency as well. But we are seeing wage growth. So finally the wage growth is coming through, which the central bank really put a line in the sand. That's what they wanted to see.
I think sort of as we discussed previously, the dollar yen is likely to move more on US cuts as opposed to Japanese rate rises.
Absolutely.
Just, I mean, in any other scenario, it would be crazy to only see a 22 basis point rise by the end of the year, but
it's pretty much locked in. But the US data and OAS pricing has a lot more room to move.
Yeah, I think we'd be surprised to see that stay at 64.
Yep. And the bond curve's trading aggressively low already.
And yeah, so I'm sure everyone has seen this, anyone who's looked at the news, anyone who's just taken an interest in any sort of politics. So obviously there was an attempted assassination on Donald Trump a couple of days ago at a rally in Pennsylvania. So he was incredibly lucky to be alive. He literally turned his head like that, and that meant that the bullet grazed his right ear as opposed to hit him in the back of the head. But on this news, as you can see from the chart, his chance of winning has just gone up to even more than it was before. So I'm sure people have seen the photo as well. I believe one of the most iconic photos that's been taken in recent times. Donald Trump with blood on his face, Secret Service agents, and then the US flag behind him.
Absolutely defiant.
Just, if he couldn't have asked for anything better for his campaign. Obviously, he was incredibly lucky. I'm sure he didn't want to be shot in the ear, but just like almost with the benefit of hindsight now, almost a gift. So his chance of winning has increased to, and this is via, so Predict It. It's like a betting website that uses essentially, they let you bet on political things, so elections. And as you can see, his chance of winning has risen well above 60%. And the main reason for this is a continuation of what we've seen in the last few months, especially after his debate with Joe Biden, which really cast into question Biden's ability to be a successful candidate. At least like Democrats and senior Democrats were very vocal about this for the first time. But we see Trump perform extremely well in swing states now. So in all 7 of the most important swing states for the election, Trump's chance of winning is his least chance of winning in any of them is 61-39. So that's in Michigan. He has a 61% chance of winning according to current odds. North Carolina, which again is another state that we think of as maybe being 50-50, he has an 82% chance of winning. So we really see if the Democrats are going to claw this election back, it's going to be something huge would have to happen between now and November. And in terms of what impact has this attempted assassination had on markets, in terms of equities, we haven't really seen too much. In terms of currency differentials, we haven't seen too much. Any sort of changes like that are just compounded changes based on the chance of Trump winning. So we saw Bitcoin rally 9% almost immediately. That's the chart you're looking at right now. Literally happened within a matter of minutes. And the interesting one, so Trump Media and Technology Group Corp with the ticker DJT has risen 61% in pre-market trading from around $30 to almost $50. This has been a real source of, basically a source of net worth for Trump. So whilst his various Trump enterprises haven't been doing too well, Trump Media and Technology Group has been doing extremely well, or was sort of simmering off and getting a bit worse. This has absolutely caused it to skyrocket, generally due to the increased likelihood of him being the next president.
Yeah, I'm actually surprised there's not a bigger impact on other markets, because if Donald Trump is elected, it's likely that with tariffs coming in, there'll be a slight uptick in inflation. So yields are expected to be higher. So bonds selling off, stronger dollar, weaker peso, of course, with a stronger border. I'm surprised there was no real impact this morning, especially with this huge impact with Trump Media and Technology.
I just can't believe how close we were. Literally as a matter of a couple of millimeters. And like OIS, who knows? Just everything could have been different. There could have been an outbreak of a civil war, something like that.
Civil unrest for sure.
Really just...
Equities would have been hit aggressively, lower.
And generally just how much worse the outlook would have been for the US as a stable place.
Absolutely, for democracy.
Yeah. But luckily that didn't happen.
Excellent, yes.
Yeah. And we can talk about these charts without fears of a massive change in the next few days.
Yeah, but what unexpected news for us to wake up to on Sunday morning. So let's go back to a couple of charts. Let's pull up, firstly, let's look at last week's chart of the week. We looked at 2-year bond yields. We said we expected bond prices to go higher, yields to come lower. The market had just broken through the 265 level. It's trading at 264. And we had the weaker data. It's traded very well. It's now trading 20 basis points lower at 464 from 465. So 465 down to 444. So 20 basis points move there. This week's chart of the week, we've picked on gold. Gold starting to rally again. It's close to the previous closing highs. It's approaching key resistance at 2,430. Again, if the central banks cutting rates, the economic data is getting weaker, the dollar's been getting weaker, then we think gold is going to be a favorable asset to buy. And again, when assets break new all-time highs, typically they get bought on the breakouts. So buying gold above 2,430 is this week's chart of the week.
I think, yeah, as we were discussing as well, so central banks getting involved.
Absolutely. We discussed a couple of months ago how the Chinese central bank, PBOC, had been aggressively buying, but they actually haven't bought gold for the last 2 months. The Reserve Bank of India have done that. And again, it becomes self-fulfilling when it breaks new highs. Algorithms are buying, hedge funds add to longs. And if it's a trading position, then you can just raise your stops as it breaks new highs. So what do we have to look forward to this week on the data front? It's a pretty quiet week with data. Today we have Fed Chair Powell speaking again. Tuesday, US retail sales. Thursday, we have the Philly Fed manufacturing data. Of course, we do have banks earnings this week. We have 11 Fed members speaking, but on the data front, on the whole, it's a pretty quiet week. Anything you have your eye on this week, Harry?
Well, my sort of main interest would be, I've seen that Donald Trump's going to be making a speech potentially today or tomorrow, where he's, well, according to what he said, he's completely rewritten it and wants to call for a really overall unifying message that perhaps it wasn't before. So it will be very interesting to see how sort of typically presidential that speech might be, or the sort of angle he goes for.
And how much media attention is that going to get? That's going to get so much coverage.
It's the only, well, potentially the only sort of event that could sort of take away from coverage about England losing yesterday. But
we don't want to go there.
We don't. Just focus on literally anything else.
Football didn't come home, maybe in 2 years' time. It's a long wait.
Oh, but well, that could be in the middle of a Trump presidency. Who knows? In the US.
Excellent. We got that to look forward to. I'll be watching gold this week. I'll be watching the bond curves. And also if there's any more follow-up to the equity volatility last week, selling the NASDAQ, buying the Russell 2000. Interesting times. That's all for this week. Have a great week. Thank you very much.
Thank you.